Hey guys, now that we understand market structure, the next question is, where do we actually enter trades with high probability? Well, there are many points of interest in markets, but today I want to show you the three I find the most powerful, which is number one, we have the order block. We have the order block. Number one, we have the order block. And the order block. Number two on the list, we have fair value gaps, which is FVG. We have fair value. We have fair value gaps. No, we all call it we all know it as FVG, fair value gaps. And number three on the list is what is happening? Number three. My key got pumped. Sorry about that, guys. Number three is breaker block. Breaker block. Yeah, I don't know. They're not short. There's no any short form from that, but I'll just put it out there. BB. Breaker block. Sorry. Wonderful. Breaker block, and this obviously is an order block, which is which is OP. These are the songs that smart traders watch every day. Every day. So point of interest are basically areas on the chart where price is likely to react. Understand? Think of them as areas where big buyers or sellers are waiting. So if you understand how to spot this, your entries becomes much clearer and higher probability. So what is an order block? An order block is also very smart money enter the market before a strong move. Understand? An order block another block is is a zone where smart money entered the market before a strong move. That is what another block is basically. So another block is is a zone where smart money enter the market before a strong move happened. So we have two types of order blocks. We have the bullish order block and the bearish order block. We have the bullish order block. Bullish order block. The bullish order block. The bullish order block. And the bearish order block. And the bearish order block. Bearish order block. So what is a bullish order block? Basically, a bullish order block is just the last candle before a strong upward move. Last candle before a strong upward move. Then, as you all know, the opposite, which is a bearish order block, is also like a last candle before a strong downward move. Simple. That's it. And why does this matter? Price often come back to these ones before continuing the trend. That is like smart money enter before that. We are waiting that price will likely or mostly come back to do that. Price come back there often and just kind of continue the trend. So Let me give you one bullish order block look like initially. So let's say the bullish order block last candle before a strong upwarding. Let's say you have something like this. Then now have something like this. So let me make this green. Sorry, let me make this green. And I mean this red. So like we said, the bullish order block is the last candle before a strong upward. This is the last candle before this strong upward, like this long candle. So automatically this becomes the other block. This becomes like the other block. This becomes the other block. It's a week above, probably. Stuff like that. And then let's just duplicate this. Sorry. Let's just duplicate this, with the week above time below. Dinner zero have one also. So this is the other block. You kind of mark it with the week above. Because sometimes you mark only the body. Price tends to kind of just, now this off from the week. So this becomes an order block. This becomes what? This is a bullish order block. Then it's nearer. We have like, we're in a downtrend. Then we have this we have this last candle for a strong downward. I say this is the last candle. Then we have this. This is going to be red, and this will be going. Sorry, this comes. Yeah. So you have this as to be. So this becomes what? A bearish order block. This becomes a bearish order block. This becomes a bearish order block. Which means, the last candle before a strong downward move, and this bullish order block is like the first candle before a strong upward move. So bullish order block. Bullish order block. And we have bearish order block as well. Bearish. Sorry. You have bearish on the block. Bearish order block. So there's a bearish order block. Bullish order block. A bearish order block. Then let's just head out to the chart. Let me show you what I'm actually trying to explain to you right here. So these are, if you look at these charts, what do we say a bullish order block is? Last candle before a strong upward move. So here's an example on this chart. If you look at this text, this is the last candle before we have this strong upward move. And if you notice, price came back into that zone. Used that zone as a point of entry, that as a key level for it to just continue the trend. It doesn't get simpler than that. To continue the trend, which is this is a bullish order block, the perfect illustration of bullish pattern block, and front part tap on recently and auto trade on this. It is other block, because this was I think February day about last week I think. Then if you also look at it again, there's also another bullish order block here again. The candle before the strong upward again. This is the strong upward movement, and this is the last candle before it. You see, price uses that zone again as a key level, as a point of entry stand. Buy again. Now, place it on and look for a bullish order block, which is the candle before the big downward move, which is the last candle for the big downward move. I mean, the last candle for the big downward move. Look, this is the last candle here. Look at this, very clear. And look at this, we have a nice strong downward move, and this is the last bullish candle before the downward move, which makes it a order block. And if you notice, price did come back into there, we have reacted nicely, then drop of 4, like drop again. If you look again, this is another example. The last candle before the strong downward move, which is this candle before the strong downward move. Same. Yeah, this is it. Price got into that area and kind of, dropped back again, because that is where smart money already entered the trade previously. So we all expect price to come in there to continue in the original direction. So this is a perfect example of what I mean by a bearish order block. Like I can go on and look like search can you always, or you always will see that yes, okay, it works. That's mostly why I trade, to be honest. Order blocks, solid one. There are different type of order blocks, right? I'll make another video about that. But this is just the basic order block and basic understanding of order block, how you can spot it, how you can trade it, how you can make money with it. That is just it. Then on to the next one, we have fair value gap, which is the second POI on our list, right? Yeah, which is the fair value gap. So I'm number 2, fair value. Sorry, choose it. Fair value gap. I brought me this. Got the fair value gap. So what is a fair value gap? So a fair value gap happens when price moves too fast, leaving a gap between candles. Like where price moves too fast and leave a gap between candles. So now, happiness when price leaves, when price leads, and price leaves gas between candles. That's fair value gap. That's fair value gap. So let me give you an example of what fair value gap looks like. Now, we have the candle right here. So let me make use of here. Example of fair value gap looks like. What fair value gap looks like. So let's say we're in a downtrend. So we have this bearish candle. That's the bearish candle. And that this bearish candle as well? No. Bearish. Let me give you it as well. To then this red as well. And now try this gap between candles, like move too fast and eliminate gap between candles. What do you mean by a gap between candles? Okay, so we are at a week. Sorry, we got a. So then we could like this. So price move too fast because this is like an impulse movement, and price is a gap between candles. So this is like the gap that we're talking about. This is a gap that we're talking about. Price runs quickly, leaves and fair value gap, comes back to touch it. Like price usually come back to fill these gaps before continuing trend. Meaning, after giving this, price could usually just come like this, 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 tap into this, then continue in its original trend. Now, let me show you what I'm saying. Make sure what I'm saying. Now, this is what a fair value gap, right? Can happen with any kind of be it like, whatever kind it is that you're looking at. Now, this is a fair value gap right here. This is a fair value gap. You see, after that impulse movement, when price moves too fast, even a fair value gap, price retreats back into this fair value gap, because basically these are fair value gap here to here. Then price, went up, came back into this area, like it comes back into this area, taps into it, then kind of continue the movement again and uptrend. That's what fair value gap simply means. Now look at same thing here. Look at same thing here. We have a fair value gap here. Very fair value gap right here. Perfect illustration. This is a bearish fair value gap, like that bearish and bearish, but basically it was hand in hand. This is a fair value gap. Price moves too fast. This is a gap between this, 1, 2, 3 candles, the low and the high. Price taps back into it, then continue in the downtrend. That is what fair value gap is at. Most times, price tends to use fair value gap more as a key level POI itself, but it's also a POI. And price uses it as well. Like price uses it as well. Always, price uses it always, right? Now, the third one on the list is what we call breaker block. So we have breaker block. Number 3 on the list is, it means it's breaker block. I personally don't choose this all the time. No. Anytime I see them and I feel like, okay, it's valid, I use it. So, what's a breaker block? A breaker block is a fleet order block. Basically, I did say it simple English. A breaker block is a field order block. Where price fail to respect that order block, price tend to come back there and continue in whatever direction it is that it was coming from. So, to me, let's just put it simple English. A breaker block is a field order block of flipped order block. Doesn't get simpler than that. It doesn't get simpler than that, and doesn't get harder than that. Easier than that, or harder than that, whatever. So breaker block is a field order block. It's a field order block entirely. So, this is a bearish order block, right? And we expect price to come back probably into there, and we expect it and continue downtrend, right? But a situation whereby price fail to expect it and probably closes below here, then there's also the potential, but price will most likely come back here. Use it as a key level or a POI to continue in the original direction it was coming from, which is the uptrend. So that is when we have what a breaker block. Now let's just head to the chart to show you. There's no much. A breaker block is simply a field or field other block. So still like other block, breaker block, stuff like that. So now let's head out to the chart. I'll show you like series of other blocks that failed that price later used as a breaker block. Now let's go. Breaker block, simple. Now look, this is an order block. The last candle before a strong downward or upward movement. This is the last candle for a strong. This is the last candle called a strong downward movement. Price actually tapped into it, but price disrespected it by closing above. By closing above the order block. And if you notice, price came back into it and using it as it's more like resistance point, support, stuff like that. But this is when price disrespected and another block, by the way, then uses it for its original movement. This is a failed other block, by the way. The other block failed, then price came back into it, tapped, and boom, upward. Simple as that. That's what we call breaker block. Now let me show you more examples of what breaker block actually look like. There's a lot of examples. Like, you just have to know how you kind of train your eyes to see them. This is another block as well. This is another block. Last scan for the moment. Price disrespected it. Price came back into that same level, tapped into it, and continue its movement upward. That's what we call breaker block. Basically, it disrespected other block. I put it that way. Now let me show you one more again. The last candle before the remove itself, which is the last candle for the downward movement or upward movement. Anyone. Now look, this is another block idea. Price disrespected it, came back into it, uses it as like a support or a breaker block to move upward. That's what we call a breaker block. Same thing also happened here again before the major one. This is the last candle before the downward movement, like the impulse downward movement. You see, price disrespected this other block, came back into it, tapped into it, and continued in its original direction. But originally it's like giving us an uptrend, from an uptrend. Price disrespected the other block, tapped back into it, and like came back into it and continue in the upper direction. So basically that's also other block, and these are point of interest that like appears every time on the chart. You don't have to learn to spot them. You don't have to train your eye to spot them. You don't have to train your eye very, very, very well to spot them. It is easy to spot when you know how to spot it. So cues I will give you on this POI, how to use this POI, by the way. Just simple things. Number one, don't chase price. Wait for it to come into the zone, because price will definitely come into the zone before reacting. Number two, look for a reaction, wicks, rejection, candle patterns. These are more of like confirmation for you to know that, okay, yes, price is not going to disrespect this on that block and later use it for a breaker block. So you just have to wait for like confirmation, like CISD, all of that. I'll make more videos on that. Just have to wait for confirmation, like with rejection, candle patterns, or those that use candle patterns as their own confirmation. Stuff like that doesn't get easier or other than that. And number three, always combine with structure, because trend context matters. If you're marking an order block, make sure your order block is in alignment with the structure. Make sure your order block is in alignment with the structure, because that's what usually make price disrespect another block, then use it for a breaker block. If notice, the whole structure, or let's just say the order flow here is what's bullish. So that's why I could use this I can use like this order block to continue in the bullish movement. And you see, price came back. I still used it again to continue in the bullish movement. Now the other flow is bullish. I myself won't express like price to expect any other block in the above here. Because basically the other flow is bullish. The structure is bullish automatically. We don't have change of character. Chain is still bullish, to be honest. So that's just it. And you just have to know where you have change of character. Then I'm okay. I have change of character because them going like, okay, any key level or any POI, around that spot is valid, then can go against like more counter trend. But as long as the structure or whatever it is you're looking, the structure is saying that, know that yes, it is bullish. So yes, there are many points of interest in the world, but this thing I find very powerful. If you can read other blocks, fair value gaps, and breaker blocks properly, your edges become precise instead of case rock. As in, you get asked my entry, your entry become like 100% precise, instead of case rock. So, like the video, subscribe. I will go into how to spot real trend changes and avoid take out in our next video. See you in the next one. Peace out.